Hello everybody on YouTube. Thank you so much for joining the Stock Martin channel. If you're new to the channel, please subscribe down below. Leave me a comment so I can give you a shout out at the end of my videos. Also get that little notification bell. It's the bell. If you select it, hit all so you can get all my videos. I have a really great video for you today. I'm going to be talking about two tech stocks that got real beaten down and that have a huge potential, according to Wall Street, to get huge increases in your money. Over 100%. These are very high-risk stocks, so please do your own due diligence before purchasing any of these two stocks. However, they have a big upside. I do own one of them. At the end, I will tell you which one I own. And let's get on to it. I did want to show you this article from Stock News. And the title of it is Two Technical Stocks That Wall Street Predicts Will Rally by More Than 160%. So the first stock that I wanted to talk to you about, it's called IDEX. Its ticker is IDEX. And recently we've had a very big sell-off in the EV market and the technology market ever since February 19th. Around that time, we had huge sell-offs. And this is one of the stocks that got really sold off. And I think you can get a really dirt cheap good deal on it right now. It is really risky though, so we'll definitely talk about the stock and how it performed. But I did want to talk to you about this stock just real briefly. So IDEX, it is focused on the transformation of commercial electric vehicles, also energy consumptions. It looks into financials and fintech products. The company operates all over the world, in the United States, China, Russia, United Kingdom, so Europe, everywhere pretty much. And most recently, it has acquired a lot of the zero-emission electric tractors. It's an acquisition, the company Solo Electric. It has also been a very big in EV industry. So as I mentioned, it has also acquired other U.S. hybrid companies, which is a manufacturer and distributor for electric power components and fuel cell engines. IDEX is involved with all electric vehicle and also, as I mentioned, financial and fintech. So it does have a lot of revenue. Just looking at its total revenues, it's increased 8,553% year over year to $32 million in its fiscal first quarter that ended March 31st. And its gross profit stood at $10.8 million, which is up 24,000% for the same period last year. Now, this is a very small company, and so please, again, do your due diligence before purchasing this stock. And we'll talk about it a little bit more later. But analysts do predict that the IDEX revenues can increase 382% year over year. And it should make $129 million this current year. Its earnings per share is expected to improve 82%. And its shares have gained 73.9% over the past year and 33% over the past month. So let's take a look at this stock, IDEX, Ideanomics. And so if you look back 6 months ago, like I mentioned in February, this stock got all the way up to $5.43 per share, but it has really gone down quite a bit. It's gone down 56%, and it was at its lowest point trading at $2.37. As you can see right now, it is trading at $2.59, so we are almost at its lowest that it has been in the past 6 months. I did want to bring up the 1 month. It is still trending downwards. I don't think that we've reached that bottom yet, but as I said in the past, we have seen a bottom of $2.37 or $2.35. So if you do keep this on your radar, it's for me, I would consider it a buy, a purchase, if you can get this around $2.30, because you do have a very big potential. I think also once this semiconductor chip shortage starts improving, this stock should also start doing well because it's heavily involved in manufacturing of electric components and fuel cell technology. So moving forward, I think this will be a good penny stock to look into. It does have a market cap of $1 billion. I consider it a penny stock because it's very, very volatile. If we go back in the past year, let's go back past year, 5 years, you can see that we've had big pops in the past. So looking back, August 24th in 2018, it also tested $5.40, and it took a long time before it got that back again. So the reason why I'm showing you this is it is highly volatile. So please be very careful when purchasing this and make your own judgment, do your own due diligence before purchasing this. But it is one of the stocks that's on my radar, and it has really gotten beat up. It's down in the past 6 months by 13%, but it has a very big upside. The second stock I would like to talk to you about is CleanSpark. Its ticker is CLSK. And this is a provider of the diversified software and Intel energy services. It's also a worldwide company. It does have products that are switchgear and other software platforms, and it was just recently added to the Russell 2000 on June 28th. On June 2nd, CleanSpark agreed with Pioneer Power Solutions on rights to serve as a preferred distributor of PowerBlock, which is also an EV power system solution. So again, the EVs, once this chip shortage, semiconductor shortage starts rolling out and kind of fizzling out, I think this stock does have a good potential. It is involved with growing the infrastructure, charging infrastructure for electric vehicles. So if the infrastructure deal goes through, I think this stock should do well, or it has a potential to. Looking at its revenues, according to these analysts, it has received 122% year over year at $8.12 million in the first fiscal quarter. It has a net income which increased 227% year over year to $7.4 million over the period. And it has an earnings per share which was increased to 119% year over year to 22 cents. Looking at all this, the expected growth of this company is quite high, and we will look at the analysts to see what they have to say about it next. So looking at its TipRanks review, one reviewer reviewed Ideanomics, which ticker is IDEX. They gave it a moderate buy, 0 hold, 0 sell. They did give it a price target of $7 in the next 12 months, which is 170% upside from now. Again, these are very volatile and very risky stocks, so please do your own due diligence. The second one is CleanSpark. Also looking at TipRanks. Looking at TipRanks, CleanSpark has an evaluation by two analysts that both give it a buy, a moderate buy. This does have a 12-month price forecast as $47.50. It does have an upside of 193% from now. Again, this stock is very, very volatile. If the highest of these two analysts gave it a $50 price target, the lowest, the other reviewer gave it $45. When you average those together, that's where we got the $47.50. But again, looking at these two stocks, CleanSpark was also very oversold. It was trading at the highest point back in February around, let's take a look, around $38. And it has dropped all the way 63%. It has dropped $24. It has tested a low on May 13th of $13.84. And in the past month, we are also still down at 6%. And again, as you can see, the downward regression line, we are still not touching the bottom. We have, like I said, touched the bottom of the resistance was about $13.84. Right now we're at $16.16 on CleanSpark. So this stock is also very, very volatile. This is a very smaller company. It's a smaller company than IDEX. It is 548 million market cap, so $500 million market cap. But again, it's a penny stock, and don't let the share value fool you, because look, IDEX has a bigger market cap and it's trading at a few dollars here, versus CleanSpark. It's a lot smaller company and it's trading at a lot higher value. So that just tells you that these are both very small companies. They're very volatile, so please do your due diligence. But these are just two of my penny stocks that I'm watching, and I hope that you find this video interesting. But thanks for watching these two stocks. Again, they're penny stocks, very volatile. Please do your own due diligence before you purchase any of these stocks. Out of the two, I did tell you which one I do own, and I do own the IDEX. I have purchased it at a low price, and I'm just kind of holding it. I'm not heavy into this stock, but just if you do have some money that you just want to put into it to see if we can get that pop again, it does have its potential. And as you can see, TipRanks and the analysts out there in Wall Street do think that this has a potential of over 100%, but with that huge increase in your return, you can also lose it very, very fast because it is very volatile. So I hope you liked this video. If you liked it, please give me a thumbs up. It'll share this video with others. If you're new to the channel, please hit that subscribe button, hit the notification bell, hit all, so you can get all the videos I put out there for you. I work very hard to get this research for you so you can make your own decisions, and I love what I do, and I hope you enjoy watching it as well. Thank you again so much for supporting the channel. We are getting our subscription numbers up to close to that 1,000 mark, so I'm very thankful for you for that. Down below, if you would like to help out the channel, I put two links. One's for Webull. If you open an account, deposit $100, you get 2 free stocks valued up to $1,850. If you deposit $100 into Coinbase, you get $10 of cryptocurrency and trading. Thank you for supporting the channel.